Welcome to the Transparent FX Academy. In this video, I'll speak about AUDUSD. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, which is what the big players in the market are doing and how they're moving and shifting their orders, which you see right here. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong historical monthly demand and support zone and rejecting it to the upside. This area held the market during one of the strongest sell-offs for AUDUSD, and from that moment this level continued acting as quite strong support and demand here from a monthly standpoint, with multiple rejections to the upside that started exactly from this zone. And these rejections to the upside came with very strong institutional buying, and we will be speaking about institutional positioning in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that the market is again testing exactly the same zone that we have already identified here on the monthly standpoint, has already started rejecting it to the upside. So in a situation like this, more bullish price action could be expected away from this level, as already happened in the past when the market was testing this exact same zone. So let's keep this in mind and drop down on the weekly time frame. From a weekly standpoint, we can notice an inversion of trend here on the weekly chart, and what we can notice is that we went from the creation of weekly lower lows and lower highs, so we had a weekly bearish trend, to now the creation of weekly higher highs and higher lows. So here what seems quite clear is that more bullish price action could be expected, as we have already noticed from a monthly standpoint. We can also notice that the market is currently testing previous weekly resistance turned support. This level was acting as previous resistance preceding these rejections to the downside. The market has now broken back above that zone, so this previous resistance is now turned support here. And what we can notice is that since we have an impulse and a correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg, and this gives us a 0.32 50% and 0.618 Fibonacci retracement zone, which is lining up perfectly with this previous resistance turned support. Now this creates confluence of support and demand inside of this area, and when there's confluence of support and demand, there is an increased probability of seeing institutional buying inside of this zone. So let's keep this in mind and drop down on the daily time frame. Now from a daily perspective, what we can notice is that the market has just created this M pattern. Now when there is the creation of an M pattern, there is an increased probability in my experience to see a rejection to the upside and for the market to complete the M pattern at the neckline, which is the previous support turned resistance. Now in this case, the market has also reached a daily support zone because this level was previous resistance with the creation of this red candle, which is now turned support. So there is a good probability of seeing institutional buying inside of this zone that could push this price higher, completing this M pattern at the neckline. So at the previous support here, now turned resistance. Speaking about institutional buying, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, so the non-commercials, and we look at the data for the AUD, the first thing that we have to keep in mind is that if we are looking at the data for the AUD, we are actually already looking at AUDUSD because all currencies on this spot are traded against the USD. And what we can notice is that net positions have been increased massively. We went from minus 100k net positions up to minus 51.1k net positions, with 8,000 longs added just with the last report and almost 20,000 shorts getting closed. So institutions are closing shorts and opening longs on the AUD, therefore on AUDUSD. Now, let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now, back to the analysis. So here on the daily, the market is currently testing this area of support from a daily perspective with this M pattern. On the monthly, we are rejecting historical demand and support. On the weekly, we have that confluence of support and demand area. So what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside, completing this M pattern at the neckline. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations, one-on-one mentoring directly with me for any questions you have along the way, the COT data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about, have access to the live trading show. So essentially, every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure to click on the like button. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Also, any questions you have, leave them in the comments below. Subscribe to the channel so you never miss new updates, and I will see you in my next video.